NIO investors are super desperate right now, given the fact that the stock is making lows after lows. And so I see in my comment section that people are asking me to call on the management to do stock buybacks. I see the same comments on X. And so I want to comment on that on this video and explain why I personally think this is a terrible idea to buy back stock right now. I think it would actually have to impact that it would tank the stock even more. And I will outline why I think currently the stock is down and a couple of comment on a couple of reasons why this is the case, and towards the end I will also tell you what I think the company could and should do. So stay till the very end. And in the background you see a chart which is Tesla stock. You know that I'm also invested in Tesla since the early days, 2013, and I'm not saying that NIO is the new Tesla and that NIO will follow the same trajectory as Tesla. However, they are in a similar business, and so people can start and compare the company and the stock. Why I'm bringing this example here is actually not because of the similarities between NIO and Tesla stock, but rather about the story here behind Tesla, which I, of course, lived through and followed through, and where we had the situation that Tesla stock didn't move for a very, very long time. And you could actually buy Tesla stock in 2014 at the same price as in 2019 towards 2020, while one could argue the company has done tremendous improvements within this 5-year period, one of them being launching the Model 3. That was in the middle of 2017, and as we know, this has become the game changer for Tesla. So a very important model, very important milestone, and we had a ramp up in sales, for example, and a couple of first profitable quarters within this period. However, what happened is in 2019, the stock tanked, I think, around about 50%. With the result, you could buy the company as cheap as ever. So the stock is not the company is not the stock. Fundamental improvements don't always translate automatically in a better stock price. And I want to use this as an example, thinking about NIO, which no doubts is trading at a pretty much very low valuation. If you compare the multiples and the valuation multiples given, they are even below a time in 2019 when NIO was almost going bankrupt, when they actually didn't know how many weeks they have left until they have no cash in the bank account. And currently NIO is maybe selling 5x more cars, having much higher revenues, have positive margins. They have 8 billion in cash, and still on the valuation metric, they're trading lower than back then when the company was facing immediate bankruptcy. So that's odd, isn't it? And so, why do I then think that using this cash position is actually something stupid to do right now? Well, first of all, let's get more into a couple of reasons why I think the stock is down. One, people are talking quite a lot about, and I'm also keep on talking about those narratives out there, which are mostly short seller narratives, to be honest. Like the question marks and doubts around NIO usually are spread by influencers, YouTubers, people on X, oftentimes in the media as well. And those are asking whether or not NIO is having a sustainable business model and whether or not they can actually become a profitable company in the end. And they create narratives, for example, around NIO, the cash position, cash burning, around NIO diluting shareholders, around battery swapping, taking lots of investment, around how the ET5 has been a failure, about how NIO cars are not, having some certain flaws and these type of things. I mean, sometimes I'm picking on them and try to diffuse them. but sometimes I also leave them uncommented. But anyways, these narratives are very real, and I think that's something natural to happen in a startup where you don't know what's the outcome going to be, whether or not they succeed or not. Nobody knows this. We can only think in probabilities, and currently the odds favor those who are saying that NIO will not become a successful company because frankly, the company has been in a difficult macro environment, right? So this has resulted in the company facing a tremendous amount of short selling. 170 million shares roundabout are currently short the stock. So these people are betting that they can buy back the stock cheaper at some later situation. Maybe that the company will even go out of business. And that's facing pressure on the company because ultimately this is creating an overhang of, people who are selling the stock. If there's not enough supply and demand for shares from buyers, then obviously the result will be that the stock price is going down. And it's opportunistic to do this in an environment where we have macro environmental problems such as the sharpest Fed rate hikes ever, a very bad sentiment for Chinese stocks in general. And so I just want to highlight that it's across the board that we see quite absurd valuations for Chinese companies, but not only Chinese companies, also a couple of growth stocks in the US and also particularly small and medium cap companies or smaller market cap companies that are facing issues during this time when there's only demand for the Magnificent Seven, the big tech in the US, which are perceived as safe haven because of their big cash position. And, as there is no demand for Chinese stocks at this point, then the short sellers have a very nice and easy playground here, and that results in the case that currently, and I'm seeing this out there, nothing works. Even positive news is being sold off. Even some slight positive hopes for the future are getting diminished very soonish. And so this is, I think, what's resulting currently in this depression by retail investors. And so people are, and I think rightfully so, demanding answers by NIO management because, of course, there have been also mistakes have been made. And so one of the ideas that I now see popping up in my comment section everywhere is that NIO should use some of the cash in order to buy back shares, in order to send a signal. Now, why do I think that this is a terrible idea? Well, I think it defeats basic understanding of a valuation of a company that if you are now going to buy back shares, then obviously you need to use your cash position or you need to take on external funds like borrowing money. And that, as a result, inevitably will have the consequences that NIO would have less equity in the company. So if NIO would have a lower cash position, then obviously you would also have to reduce the amount of cash that you value for this company as well, and then therefore you need to reduce the market cap by a similar amount. Well, you could say then, of course, it's a boost, it's a positive signal, and we might see a short rally on something like this, but it's definitely not going to scare away the short sellers in such an environment. And second of all, it makes the company even more vulnerable because, of course, they raised the money in the first place in order to have a strengthened balance sheet in order to make it through these difficult times. That was the first idea with this, to do it anyways. And we don't know yet whether or not they're gonna use and need all of that money, but certainly it's kind of a cash cushion, especially given how high the quarterly net losses are currently with NIO. And in my expectation, those net losses will go lower and lower with the next couple of quarters. But we don't have a guarantee for that, right? At the same point, as I'm saying, the sub-brands will be a catalyst to the stock because it will definitely grow the revenue and therefore show also nicer, for example, year-over-year and quarter-over-quarter growth numbers. At the same point, it might need additional investment. So there are question marks whether or not NIO can actually go to this trajectory on breaking even, and whether or not a launch of a sub-brand will actually kind of delay that a little bit. I think that's also something which those people who have pessimistic views on NIO are currently looking for. And well, my hope is that, of course, they will still be able with the cost cut measures, and that they now also got definitely the message that they need to save some cost, that even despite launching those new brands, they will be able to show cost savings while growing revenues. And that's exactly what, in my point of view, will drive out the short sellers out of the stock, because this will exactly create demand for the stock by Wall Street. And because, these are the financials, these are numbers that you can't ignore, and as soon as it will look more and more likely that NIO will actually become a profitable company, at that point it will be very dangerous to still try and drive the stock price down, because if you're shorting, you can always have unlimited losses. There could be, as NIO is a volatile company, a stock, the stock price goes down quickly, but it can also go up very, very quickly. So they can get burned. And coming back to Tesla, they have a CEO who made it kind of his personal task and his aim to burn those short sellers, and he did so quite successfully. Maybe today he's in a different position, and Tesla is the benchmark for EV stocks out there. He might be aware of that. He might be playing around with that as well, trying to force competitors also to be not able to raise funds anymore. I think we see a couple of comments that I personally did not quite like about Elon Musk commenting, for example, on Lucid, on NIO and Rivian, that these companies are seemingly in trouble, therefore also helping to bring awareness to this topic, therefore also helping the short seller narrative. And at the same time, he's not doing lots for supporting Tesla's share price currently. So this is also taking away a little bit of demand for EV stocks in general. And all of that has to result that currently EV stocks are totally out of favor, and possibly those companies will not survive. And now, making the conclusion here for what this ultimately means for NIO, and again, what NIO could do and what I think they should do. Well, first of all, I think I mentioned already in my last video that I think one signal, if you're really asking for a signal as a retail investor by the company, then that signal wouldn't be to buy back shares with the cash position, with the consequences that I just tried to explain. But instead, they could try and find a scapegoat like the CFO and say, this person is made redundant because this person has made too many mistakes. For example, given guidance which ultimately didn't materialize, it doesn't matter whether or not the whole management team actually thought that this is realistic, or if they thought it can be achieved, and so on. The fact is, they have consistently given out wrong guidances and therefore set expectations too high, and then it ultimately didn't materialize, and that also led to, I think, a downward trajectory on the stock price on top. So one way would be to say, look, this person in charge who's responsible for that needs to go. Another big mistake connected to actually the topic of stock buybacks is that the CFO actually, in my point of view, and I said this a couple of times on the channel, was not raising money early on, he was not forward-looking enough to see that the cash position wouldn't last him long enough to break even. When they had the first couple of equity raises back then, it didn't last long enough, and they waited too long. Maybe could have raised still in the 30s and 40s more equity in order to not actually get in a position where they need to raise it at $7.50, right? And in my point of view, that's the responsibility of the CFO as well. He did fail with that again, and so that's ultimately how we ended up in this situation. And so, this person, in my point of view, can be replaced by somebody else, because he has shown that some of the very important tasks he didn't fulfill properly, and with everything else that he's doing possibly in the right way, for example, doing just the earnings calls and the reports and the planning and stuff. Somebody else can do that as well. Despite the fact that people are commenting sometimes that they don't think he is instilling confidence and trust in the company in earnings calls. And I can certainly agree with this sentiment. So that would be one way, I think, to reset the playing field. And the analysts who are covering NIO stock, they are making calls with just exactly those persons. And once that trust is eroded, why would you take anything for granted which they've said in the past? And this is not a Elon Musk type of thing where you back in 2016 said, FSD is coming, and then it's just not coming. It's something different of going out on TV and say, we're gonna deliver 250,000 cars, and then you delivered 160,000, right? That's something pretty bad, especially as a Chinese company, and you can't just plan like that. So I think that would be a powerful signal to send to the market, to people covering the stock and to investors generally. Not sure if they're gonna go down that road, because there are just reasons of looking over this and keeping it like it is. Who knows? But certainly one of the possibilities in my view. Another one I mentioned before as well would be not the company buying stock, but possibly Li Bin or a CEO or somebody from management using their own private funds and buying stock. And I think Li Bin has done that before during 2019 when the company was almost bankrupt. And at this point in time, as kind of a panic sentiment, he could do it. I think the amount wouldn't even, be super important. It could be just a small amount in my point of view, and that would really help to instill confidence again. I think there's also other ways how this could be done. For example, I mentioned that also before in other videos, that Li Bin could also announce a very high milestone incentive plan in which he needs to reach certain milestones which are hard to achieve in order to vest more shares. This would be a dilutive way, actually, because he would be promised more shares as compensation. However, he would kind of announce that he is trying to achieve those really high stakes milestones, and it would be up to investors to trust it or not. But that would be certainly also a way of, let's say he doesn't want to spend some personal money. They could go out and announce something very, very high, high goals to achieve. Let's put it like that. Now, another thing that NIO could do, if you learn from the Tesla playbook, is that you create or you actually foster your retail investor asset, which you have in this regard, because there's no, everybody sees there's no illusions that NIO has a very big group of followers, most of them retail investors. And if they would become confident again and, for example, in a big amount start and buy let's say, long-term, like leaps, long-dated call options, or call options that are geared towards some achievable milestones, let's say the launch of a sub-brand, and we know it's going to go Q4 2024 or something. And, this in conjunction with the news that NIO would be putting out would help sentiment, would help to get some traction and some good vibes out there again. Could actually, I think, help also NIO stock price ultimately. I think we've seen something like this orchestrated by Elon Musk and his Tesla gang of all of those retail investors and even institutional investors and so on, with all of the X accounts that Tesla is kind of playing back and forth. Elon Musk is interacting with them, and they're helping to put out positive narratives. And then at some certain points, you'll see that those options are sometimes helping Tesla stock also because of the fact that, the market makers, they need to buy the underlying shares whenever the stock is going into a certain trajectory, and they need to fill up their delta hedges in a way. So these topics are kind of controversial around gamma squeezes and whatever and stuff, but I think there are some things like that happening. And if you are just interested from a company perspective to manage your stock, I think it would make sense to become better at communicating. I don't think NIO could actually replicate something similar as Tesla is doing, as Elon Musk is a very, very important influencer in this regard and very powerful, and he's got his billionaire friends and his personal hedge funds like ARK Invest and those institutions that are covering his stock from a positive angle, like some of the analysts out there you see are super long Tesla stock themselves, so NIO really doesn't have that from an institutional side, that people are rooting for the stock and that they have their own professional analysts and funds who are keeping up buying the stock. But something that could be done, and where NIO definitely has a bit of a opportunity there. Because on the other hand, and I also made a video about this a couple of months ago, is about the fact that I think NIO should care about the stock price. We see stuff like, if you just go on the NIO Global Instagram account, whenever they post something new, they're actually which is of course about the cars, then there is actually negative content, comments and content around the stock price in the comment section. So it's hurting NIO already. If you're not even aware of NIO as a brand and you get a NIO ad pushed, and then you just get a comment on Instagram how NIO is doing terrible, you possibly don't want to buy the car as well. And as well, like this whole negativity around the company and around the stock is hurting the company. And I think, maybe competitors are using it to the advantage, and there are some dirty games that are being played. But the question is whether or not NIO management is aware of that and how they are going to counter it, right? I think it's an important question, because ultimately it could ruin the company even, right? Let's see the case in which the 8 billion in cash are not enough in order to break even. Let's say something is going wrong. Maybe the demand for NIO cars is getting weak. Maybe the sub-brands are not going well. Maybe they need more money for R&D, and the current cash balance will not be enough to become profitable. What then? Will they gonna go to the markets and raise new funds at a $4.50 stock price? No, that's exactly what those people betting against NIO are betting on. They are trying to, kind of get this company to really, give up and maybe have some really, really bad consequences on the company ultimately if they're not be able to tap the markets anymore. And so this is kind of a tricky situation, and why I ultimately think, the CFO is responsible for this. And despite the fact that, things are going wrong and in startups usually, and that there are macro environments that are really not in favor, and, something that can't be influenced and is also difficult to see coming. But in the end, consequences need to be real. And so, yes, we are waiting for the signals by the NIO management, and I don't think it would be buying back stock.